So today we've got some crazy things to show you guys, so we'll go through them things today. But before we do, if you haven't already and you're on the Patreon, go check out the exclusive video that we just posted, which was a live Q&A session, which was about half an hour long. If you do want to see the exclusive content where there's 2 exclusive videos a week, join through the link in the description. And if you haven't already, make sure you join Trading 2 and 2 with the link in the description. Join through there, you get a free share worth up to £100. And personally for me, that's the investing platform that I use. I get a lot of questions on that. But let's get stuck onto what's going on at the moment. So if you look at the S&P 500, we've started to see a little bit of weakness creep into S&P 500. We had an unbelievable start to 2023. Nobody was thinking we were going to have the start that we've had in 2023. And you can see the shares absolutely erupted to around about the 2nd of February. Since we've hit about February time, the stock market has been having a little bit of a chill out. And in fact, in the last week, it's been having a little bit of a cool down, which is good to happen. We went absolutely crazy out of the start of the racing block this year. We've gone up too much. And history shows you that when we have a rally like this, we need to have a breather. And this is very, very healthy for the market. So I do not mind this happening at all. I've said for a while that, okay, we've done really well here, but we need to have a breather. We don't want to just get extended, because if that happens, when we do have that reality check, it's going to be really harsh. But you can see here, we are having a pullback. And the reason why we had such a good start to the year, as most of you guys know, inflation was rapidly coming down. And you can see here, the economy was holding up. And everybody was looking at the Fed going, okay, the economy is holding up at the moment. The inflation is rapidly coming down. You could potentially pivot soon. And everyone thought we were going to have a 2023 recession on the likes of the '08 recession, which was never going to happen. And if you were buying that dip in 2022 and you realize that, obviously you're doing really well from that situation. But now we've got to the point of view where we were getting a little bit carried away. So to have this pullback is very healthy. And you can see here that the S&P 500 has nearly given up half of the run that we've been on, which is absolutely fine with me. A little bit of a cool down is absolutely amazing. The Nasdaq, not so much. It's still up 11% year to date, but you've got to remember this was massively hurt compared to like the S&P 500, and that's giving about 5% of its gains back, which once again, I'm absolutely fine with. You know, it's a really healthy pullback. And the great thing as well at the moment, and I don't know if you guys are seeing this, is that even though the markets have been pulling back a little bit, even though the S&P is up 4% and it's had a bit of a pullback and the Nasdaq's had a bit of a pullback, my portfolio is looking okay. You know, a lot of my stocks at the moment have been holding up quite well. You look at the likes of DraftKings, for example. You know, DraftKings is only pulled back by 4% after being on a 76% rally. So even though there's been a bit of a pullback in the markets at the moment, I'm actually feeling okay and my account looks okay at the moment from the pullback. So that's obviously really positive. Now, these are just a couple of things to point out at the moment. So there's been the pullback in the markets at the moment. What's causing the pullback in the markets? Well, we've been on a crazy run. So like we said, it's historically proven that we have a pullback. The other thing, and I got this from Paul Hill, you might watch him on Vox Markets, very good YouTube channel. And he said here that the derivative markets show traders now expecting the US terminal interest rates this summer to be above 5.2%. A month ago, they were betting on a peak of 4.9%. The Fed's targets currently stand at 4.5 to 4.75%. And there was also this here by this bank here that was saying that they are raising their expectations for the US terminal interest rate. One of the bank's base case predictions predicts a recession over a soft landing following inflation numbers released yesterday. They said that the reserve rates would go to 5.6%, up from the previous forecast of 4.1%. So at the moment, what you're starting to see here is the market is actually starting to adjust on the inflation. Because previously what you had is the market adjusting to rapidly inflation coming down and the economy holding up and the Fed pivoting and pausing interest rates. And that's why the market went absolutely crazy. But now that we've been on a good run, a lot of that's priced in. The market's now at a point where it's looking at the recent inflation report, and inflation is starting to cool down and not come down as much as it was doing previously. So now you have the market trying to guess where we're going next. And that's why the market's having a cool down. We've had a good run, and also it's trying to price in potentially, do the Fed continue to hike up interest rates? And that's kind of what's getting priced in right now. I think what will be the deciding factor here is we're on pause at the moment. The market seems on pause, the pause where we're going, because what we got in the last month was inflation not rapidly coming down. And I think the market's kind of on pause going, okay, what are we going to be getting next? And we have to wait until the 14th of March. If we wait till the 14th of March, we'll be able to get is inflation starting to not slow down as much? And then within a few days' time, we'll also get the Fed and their commentary on their interest rates. So the market is now waiting for the future data, and that will probably be the decider where we go next in the market. And that's why we've had a cooling down in the market in the last few days. So that's kind of what's going on from that point of view. Now, what I saw, what was crazy was last night, Nvidia jumped up nearly it's nearly up 8% in pre-market off their earnings, and it's now at $223. And this is a major company, 510 billion market cap, trades at 88 times earnings. Now, I think Nvidia, if you're looking at Nvidia in the next 10 years, semiconductor producer, we're going to need more semiconductors. It's a company that you would not want to bet against. It's a great company, and it's probably going to have a fantastic future. However, what I've got to say today is this is crazy. The stock is up nearly 8% in pre-market, trading at 88 times earnings. And this isn't a stock that has been destroyed like a lot of other stocks. Sure, there was a time where it did drop to a pretty ridiculous value at $112. Maybe then we argue that, okay, that was a fair substantial drop. But since then, the stock has rallied already up 90%. The stock's back at $207. And Nvidia, with this, what is good today is that because it's jumping up 8%, and by the time I edit it and get this all together, the market probably be open. But at the moment, that's lifting the whole pre-market. When you're a company like Nvidia and you're a 510 billion market cap company, you're one of those companies that reports earnings and you can move the direction of the market. So at the moment, as long as Nvidia holds on to its gains, we'll probably actually see a good day in the market. But you guys will have a better idea, because by the time I release this, I could look an absolute idiot and the market's in reverse. But that's the power of Nvidia at the moment. It's one of those stocks that can lift the whole market. But getting back to the point, I was so shocked to see this yesterday. Nvidia reported their earnings. So they beat by EPS by a decent amount, fair enough. The revenue was beat by 30 million, which is nothing on a 6 billion revenue. So the numbers were okay. But when you look at the long-term outlook of this business or what they've delivered, I really cannot stand when Wall Street looks and goes, oh yeah, they beat by a little bit and the revenue beat by a little bit. So these are really good numbers, so the stock's up 8%. I absolutely hate when Wall Street focuses on, oh, they beat our numbers by a little bit, or they're below our numbers by a little bit, so the stock's going down crazy. If you zoom out and look at the big picture of Nvidia right now, they are going through a massive cycle here, a really tough cycle. You look at the business was down 20% on revenue year to date. Forget the little beat on the EPS, forget the beat on the revenue. The company is down 20% year over year. And if you actually look on the profit basis, so you can see here the revenue was down. Look at the EPS. On a non-GAAP EPS, it was down 33%. The GAAP earnings diluted was down 52%. And on the non-GAAP basis, it was down 33%. So you've got a company here that the EPS is down huge. You've got a company here where the revenue is down huge. This company is going through a massive cycle inside the business at the moment. And I think it's still a fantastic business in the long run. Don't get me wrong, I wouldn't like to bet against Nvidia. However, what I've got to say is you've got a company here trading at 88 times earnings. It's trading at a premium. This is a premium price for this company. And they've just brought out earnings like this. And this is it's up 8%. And this is on a rally of over 71%. When you look at compared to the pre-CV numbers, this stock's nearly still 200%. And you look at the metrics from this point of view. The company's 18 times total enterprise to revenue. If you look back at the pre-CV numbers, if we just go back a little bit, it was a 9. It's double the total enterprise value to revenues. If you look at the total enterprise value to EBITDA, pre-CV it was a 30. It's currently nearly a 60. It's nearly double the enterprise value to EBITDA. If you look at the free cash flow, it was around the 30 times free cash flow. It's nearly at 54 times free cash flow now. This is a premium company, a premium value for a company. Look at those metrics and you look at the share price and it's way above CV numbers, but you look at the business down here and you're just seeing a massive cycle. Now, I know that people are still going to look at Nvidia and go, yeah, it's in a bit of a cycle, but you got to remember where it's going to be in a few years, and I totally agree. Nvidia is going to recover in the next few years, But surely there has to be some pricing in that they are having a deterioration in the revenue and profit, and it's trading on a historic premium, which is just absolutely bonkers to see at the moment. And I thought this was one of the most crazy share price reactions that we have had. And we've seen some of these. We've seen some share prices go absolutely crazy. And I don't know whether it's not because they're focused on AI. AI is the hot topic at the moment, and that is what's helping it stay, at a higher value. And the share price hasn't been killed like many other companies. But it just shows you, like, a company here that, in my opinion, brought out earnings that wasn't great, still holding on to this sort of value. And then you look at something like DraftKings that brought out their earnings, and that had a 15% pop. But then you're looking at their earnings, and they actually had good earnings. So how is a company like Nvidia going up 8%, and you've got a company like DraftKings that's going up 15%? And DraftKings earnings were absolutely fantastic, but then you've got a company like Nvidia that brought out earnings, in my opinion, that were disappointing, and that's still going up. And there's been some crazy reactions in share prices this earnings report, where I've looked at a few companies that reported earnings, and I've gone, yeah, they might have been beating EPS, they might be beating revenue a little bit, but I don't think it justifies to go up that much when you look at the long-term picture. And the revenue is down 20% year over year, and you're trading at a premium, a historic premium as well, which is crazy. And then you compare that to something like PayPal. I think PayPal was flat on the day they reported earnings. And then you look at something like a PayPal, and they've had a tough time as well. They've kind of recovered from the whole CV situation, and that's really impacted their numbers. But you still look at their numbers, they're still growing in a positive way. The EPS was a beat, and you look at the guidance was higher than what was expected in 2023. And then you look at a company like PayPal, and PayPal's been absolutely devastated. PayPal is to the levels it's below its levels that it was in CV. Prior to CV, it's now down 36% compared to the CV numbers. And you look at PayPal, and you look at their metrics, for example, compared to the historic metrics. PayPal, the total enterprise value to revenues before the CV situation was like a 5, and we're down at a 2. If you look at the total enterprise value to EBITDA, it was around a 22-ish. It's now down at 11. So you're looking at like something like a PayPal, and there's just such a weird disconnect in some stocks at the moment, where you're seeing a company like PayPal bring out pretty decent earnings, no reflection on the share price. The historical metrics are half of what they normally are, and yet this stock is way below CV numbers. And then you have a company like Nvidia that is bringing out numbers that are very poor. Your profits declining, your revenues declining. You're already trading way below your pre-CV share price. You've not had that much of an impact. You've got metrics that are double what they historically are, but yet this is going up after hours. And there's been some really crazy moves in this earnings season that I've just ended up scratching my head going, that doesn't make sense. And I'm not saying that I'm against Nvidia. I'm not saying that I think it's a bad company. I think it's a good company. I think it'll be a company that's around for many, many years. But there's a point where you're scratching your head in a little bit, looking at some of the valuations and the disconnects between a few companies. You look at the likes of Nvidia compared to PayPal, and you're looking at this one going, well, why is this one still 200% up above CVs and double the historic metrics? And yet you got something like PayPal that is way below CV prices, way below historic metrics. And I'd say PayPal's currently performing better financially at the moment, which doesn't make sense at all. So yeah, I thought that was a really weird earnings that we had last night. But hey, it's lifting the whole market up, so hopefully that helps my portfolio today. But I've got to say, there's been some weird reactions on share prices this earnings season that hasn't made sense. So yeah, that's just something that I've noticed anyway. So that's just a bit of a talk about what's kind of going in the market, what's going on with the S&P 500, the Nasdaq, why we've kind of had a bit of a pullback recently, and then just some crazy earnings that we had last night that have left me kind of scratching my head going, crazy. There's some weird stuff going on in the market at the moment with some reactions to earnings, in my opinion anyway. So hey, that's the video for today. Hope you enjoyed it. Smash that like button if you're new around here, subscribe. Catch you in a bit.